Good Monday morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London, and these are the stories that set your agenda. Stocks and futures climb as the US Senate moves closer to ending the government shutdown, as moderate Democrats break ranks to support a deal. US air travel nears a breaking point with more than 10,000 flights delayed or cancelled on Sunday alone amid severe weather and shutdown-related staffing shortages. And in China, consumer prices rose unexpectedly in October, driven by holiday travel and higher food and transport costs. Economists, though, say the rebound is likely to be short-lived. So the shutdown news is certainly front and centre when it comes to the momentum across equities this morning. You've seen a very strong session. You continue to see that in Asia. European futures pointing higher now by 1.5% after 2 straight weeks of losses. FTSE 100 futures looking to add 80 points. S&P E-mini stateside pointing higher by 0.7%. And the Nasdaq 100 after the worst week last week since early April, currently pointing higher by more than 300 points, looking to add 1.2%. Let's flip the board and have a look cross asset then. You've seen a big move into commodities. Oil is up, copper's up, iron ore is in the green as well. And so that is something to bear in mind when you look at basic resources at the open, 8 a.m. UK time. There is also a bit of selling pressure across US Treasuries on this risk-on sentiment that we're seeing in the session today. 4.13 right now in the benchmark US 10-year with yields up close to 4 basis points. You're seeing that across the curve. Euro dollar at 1.15, largely unchanged. There's a bit of a bid for the dollar in this morning session. $64 a barrel on Brent, up 0.8%. And again, as I mentioned, across the commodity space, you are seeing gains this morning, including in gold, up 1.7%. ETF buying in the PBOC as well, adding is a factor for the yellow metal. Let's cross over now to John Herskovits, who's been following the US politics, where the US Senate, of course, has taken a major step towards reopening the government after several Democrats broke with party leaders to side with Republicans to pass a deal aimed at ending the shutdown, which is at a record, of course. President Trump sounded an optimistic note on making progress.
Looks like we're getting very close on the shutdown. We'll never agree to give any substantial money or any money to really prisoners, illegals that come into our country. And I think the Democrats understand that. And it looks like we're getting close to the shutdown ending. You'll know very soon. Thank you very much.
OK, at this point, let's bring in Bloomberg government editor John Herskovits with the details. John, tell us what has moved in the last 24 hours, what the key provisions of this potential deal are, what brought those Democrats across the line on this.
Sure. What we see in this deal is that we have funding provided for 3 agencies: Department of Veterans Affairs, Agriculture, and Congress itself. There'll be funding. This is full year funding. There's also funding for other agencies through January 30th. There will be provisions to restore pay for furloughed workers, reinstatement of those workers who were laid off during the shutdown, and there's also some callback of money for some overseas international food assistance and some other programs. But one of the key provisions that the Democrats wanted was subsidies extended for the Affordable Care Act, the Obamacare Act. This was not a part of the deal, and it's causing a bit of backlash among some Democrats. Instead of the subsidies being extended, the Democrats got a pledge from Republicans that there would be a vote probably mid-December on these provisions. Whether these provisions actually pass or not is another matter. So that's where we stand now. There's quite a bit of back and forth, but this is the deal that was agreed to in the Senate.
OK, so divisions amongst the Democrats at this point. In terms of moving this bill forward, this deal forward, you have to have the Senate, of course, to vote on it. They've had that test vote earlier this morning, a few hours ago. Then, of course, the House, and it's not necessarily certain that it sails through the House. What is the likelihood that the shutdown ultimately does end this week, John?
If everything goes as as in the best possible manner, we could see Wednesday or Thursday for this happening, but there's just a lot of division in the Democrats and the Republicans as well. So the Senate is adjourned until Monday. We could get the official vote on the measure in the Senate on Monday. Then the House would probably take it up Wednesday or Thursday. There are probably amendments which people would offer. There's going to be some backlash on both parties for this going forward. So the earliest is Wednesday or Thursday, but if there's friction, if there's arguments, if there's if there are people who are not happy about what's going on, this could extend even further.
John Herskovich, thank you very much indeed on the prospects of the ending of that US government shutdown with the latest, of course. John, thank you. Let's get to the market reaction then and bring in Bloomberg's Valerie Teitel, who's been gauging the market impulse around this story. It turns out that equity markets across assets, really, Val, investors do care.
Investors do care about this end to the longest U.S. government shutdown in history. Today is day 41. Could we see an end to this by Wednesday? And does that mean that this data fog for the U.S. economy could be lifting and quite rapidly? We're seeing the equity market trade quite positively across the globe, quite strongly when it comes to those NASDAQ 100 futures, up 1.25% after its worst week since early April last week. But to put this rebound in context, let's look at the 6-day history of the S&P 500 futures. We have nearly taken off now half of last week's decline. If you flip the board, last week S&P futures declined around 5%. But since that low on Friday, when this good news about this U.S. government shutdown coming to an end started to cross markets' radar, we've rebounded 2.2%, Tom. So nearly taken off half of last week's drawdown on this more optimistic news. Now, attention is going to shift to whether we do get a non-farm payroll release by Friday. We have some estimates from the street thinking that if we do get the government shutdown ending on Wednesday, 48 hours is enough time for the BLS to release the September non-farm payroll report. Remember, this is the payroll report that was due just right after the shutdown began. The BLS does have this data set widely completed already, but we also have to wait a while for retail sales, GDP, PCE, and again, another non-farm payroll report release that is expected to come in the next few weeks if we do get this government shutdown. BNP estimating actually that on December 5th, we could actually get two non-farm payroll releases, the one for October that was delayed and the one for November that they're currently working on.
OK, a potential deluge of data then if they get this bill across the line and if the government reopens and we look at the mechanics of that. Valerie Teitel on the market reaction, and it's certainly pronounced, as Val was saying, when it comes to the equity markets. A similar story over in Asia as well. Let's bring in Winnie Su in Hong Kong, where Winnie, last week it was a very challenged week, particularly around the AI momentum in Asia. Today, things seem to have changed.
Yeah, for sure, Tom. Today, we're seeing quite a nice rebound here, especially supported by that optimism around an end to the U.S. government shutdown. And here, you can see on the board that it's also hurting the haven assets here with the Japanese yen weakening 0.4% against the dollar. However, overall, stocks really rebounding from that sharp sell-off last week. And Kospi here is leading gains, jump over 3%. Also on media reports saying that they are lowering the dividend tax. Now we flip the board and take a look at the technology sector, because that is really the sector that's driving gains in the region today. Here, TSMC up over 1%, and that's also helped by how Nvidia's Jensen Huang over the weekend said that asked TSMC to increase the chip supplies, so helping the overall regional tech shares here as well. And just to mention, AI demand is pretty much still that big theme here in the region, because we're also going to get key earnings from major technology share companies in Asia, with SoftBank tomorrow and also Tencent and Sony to come. Now flip the board and take a look at what's going on with the Chinese assets, because a bit of a fluctuation and slightly to the upside here with both onshore and offshore stocks. Yes, we did get that CPI number coming stronger than expected, 0.2% year-over-year growth versus the expectation of a 0.1% decline. And economists right now are saying that it's mainly due to that one-off effect with the holiday demand, and that deflationary pressure is very likely for here to stay for the foreseeable future. However, we do see that pickup in terms of the travel stocks and consumer stocks overall on the expectation for more policy to come in and support consumption. Back to you, Tom.
Winnie Su in Hong Kong, thank you very much indeed. Touching on the inflation data out of China. Let's unpack that story in more detail now, because China's consumer prices, as Winnie said, did increase. They increased in October. We haven't been able to say that very often, with CPI rising 0.2% from a year earlier. However, economists, as Winnie was saying, see the price increases as likely to be fleeting, with deflationary pressures remaining entrenched across the Chinese economy. For more on this, let's bring in Bloomberg's Jenny Marsh out of Hong Kong. Jenny, how does the CPI data for October stack up then?
So we did see this sort of brief return to inflation in October, but as you say, this is sort of more of a blip than it is indicative of a trend in China. We had the big October holiday last month. And also, interestingly, economists are pointing to the rise in gold as one of the things that's really propping up CPI, particularly core CPI. Gold prices have almost doubled this year, so this is another sort of underlying factor which is masking the problems here. So I think, for policymakers looking at the CPI numbers, if they're hoping that the anti-involution campaign has worked and sort of price wars are beginning to sort of right themselves, I think the data sort of shows that actually that's not the case. And, I think if you look at the PPI, the producer prices, that was still in its 37th month of deflation. So it's very clear there's still a lot of work for the economy to do here.
And Jenny, it comes at the time when we had the big takeout this morning that's really worth reading for our viewers on Bloomberg.com and on the terminal, of course, looking at the price pressures and falling across the board in China. There's a mismatch between the official data and what we're actually seeing in terms of prices on the ground, Jenny.
Exactly, and that's true even in months when we are seeing deflation in the CPI. The index has sort of hovered around zero now for sort of over a year and sort of dipping into deflation. But we actually sort of looked at 70 products of everyday consumer items which are not captured in this basket, and found that deflation is actually much deeper on the ground than it sort of shows up in that. BYD cars since 2023 are down 27% in price. Pears are 31% cheaper, eggs are 13% cheaper. So what this means is on the ground, yes, things are a lot cheaper, and it sounds sort of great on the face of it, but actually it's really hurting the economy. And that shows up, in sort of companies' profits. We looked at the profits of listed companies. In the first half of this year, 25% of listed companies made a loss. That's the highest share on record this century. So I think it just shows, deflation could sound great, everything's cheaper, but really what it means is companies make less money, there are fewer jobs, and I think this is a big priority now for the government to address.
Yeah, and we're watching to see to what extent that deflation is exported to Europe and other trading partners of China. Jenny, what in terms of the government's response to this, what have we seen to date? What are you and the team expecting to see as the government looks to address the deflation in China?
So they've already made this anti-involution campaign sort of the big sort of push to sort of root out these price wars. And so they've sort of tried to set sort of standards for sort of bottoms for prices, like floors for prices. You're not going too low. Really, though, what it's going to take to clean up these price wars is accepting that some of these companies need to go bust, and sort of not allowing zombie firms and companies which aren't making money and so are selling at rock bottom prices to carry on trading. So what we're looking for now is to see, is the government prepared to allow this sort of consolidation in industries like the EV sector, for example, where you're going to need to see some firms exit the market. And that is going to mean there's going to be a hit to jobs. And obviously for the government, they need to balance that very carefully with sort of political stability. But I think going forward, that is sort of one of the big things we're going to be watching.
OK, Bloomberg's Jenny Marsh, thank you very much indeed on the inflation or deflation data out of China and the potential government additional response to address that issue. Of course, across the board, prices down for a little over 2 years right now in China, even as the October numbers come in higher than expected. Not expected that to be a complete turnaround in the deflation story of China. Here's what else to think about in the week ahead then. On the earnings front, a number of big names crossing with data, of course, and updates through this week. Infineon, of course, within the chip space, Bayer, Siemens, Burberry, ABN AMRO, and Banco Sabadell, so the financial space, the banking space as well, through this week. Another big week of European earnings, and we'll be breaking those for you and speaking, of course, to key executives at those companies, CEOs, throughout the week. On Thursday, an update in terms of the UK growth story, UK GDP coming through on Thursday. That's, of course, after the BOE held rates last week, but a bigger division amongst policymakers than had been expected. So that data on the GDP front out of the UK will be important in terms of building out the story here. And on Friday, it's the Bloomberg Tech Europe latest episode focused on defence, what European defence sector companies, startups are doing to try and build out sovereign defence capabilities in Europe. We feature some key names in that episode dropping on Friday. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to Go on the terminal. And, of course, the movement in the direction of an ending of the US government shutdown is central in the coverage today and the market reaction to that, which has been pronounced. Coming up, we're going to take a closer look at what to expect from those European earnings due this week, with a focus on the luxury and chip sectors. That is coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's get back to the earnings story then. Earnings season continuing this week. We have a number of key names on the docket here in Europe. Our equities reporter, Chloe Melanie, joins us now for a preview of what to look for and what to expect. Chloe, we're going to start in the luxury space. LVMH and Kering both reporting later this week. Are we going to see a rebound in luxury stocks finally?
Yeah, so after Kering and LVMH earlier in the season, we're now expecting Richemont and Burberry this week. And this will be a real test of whether or not this luxury rebound is happening across the board. So if we look at Burberry, for example, there's actually quite a few parallels with Kering. So those are two companies that had struggled a little bit and now are undergoing a turnaround with a new CEO that seems to be starting to pay off. So Burberry's retail sales are expected to return to growth for this quarter after 7 consecutive quarters of decline. And analysts are saying that the turnaround is going in the right direction there. And then for Richemont, we're expecting that the jewelry segment will be doing quite well and perhaps offsetting some of the other challenges facing the business, which include tariffs, currency fluctuations, and then also the inflation in precious metals. The watchmaking segment could be a bit weaker. This is a segment that has been weaker traditionally because of that muted consumer sentiment. But then at the same time, there seems to be maybe a bit of a pickup in China for that segment, which is also what LVMH had pointed to earlier in the season. So there seems to be kind of a lot of resilience across the sector, and that could point to that kind of recovery across that industry. OK, and to your point, Richemont and Burberry reporting this week, and that's what we're going to be previewing, and the linkages maybe from LVMH and Kering, and maybe that turnaround in the China story when it comes particularly to jewellery and watches for Richemont. What are the other key themes that you're watching this week in terms of the earnings story? We've got other big names crossing, of course, through the week. Yeah, absolutely. So telecoms is a big one. We had Vodacom reporting this morning, quite strong results. Later on this week, we have got Vodafone and Deutsche Telekom. So the real big theme here is around price competition. For Deutsche Telekom, it's also a lot about its exposure to digital infrastructure. It recently announced a partnership with Nvidia for a €1 billion data center, artificial intelligence data center. And then related to that, we also have some updates from the chip making sector as well this week. Infineon is reporting it's expected to provide maybe a bit of a conservative forecast because of that continued weakness in the automotive end market, which is also what other companies within that sector had already flagged. But that's what we're expecting as well this week. Thank you very much indeed. A great setup in terms of the luxury story and chip makers and telecoms as well through this week. And another big week, of course, of European earnings. Chloe, thank you. Coming up, we're going to switch focus because as world leaders depart the COP30 talks, the real work begins. We're going to look at what progress has been made on climate change targets. That is next. This is Bloomberg.
Welcome back to Bloomberg Daybreak Europe. So world leaders have left the COP30 venue in the Brazilian city of Belém, agreeing efforts to tackle climate change are moving too slowly. Over the next 2 weeks, then, negotiators from nearly 200 nations will thrash out the technical details on everything from how best to cut emissions to the structure of funds. To dive deeper into this, Bloomberg NEF's Deputy CIO, Albert Chung, joins me now. Then, Albert, what is at stake then at this year's COP? What are the key issues on the agenda now?
So each year before COP, our team produces a ranking of the most important talking points at the conference and how likely they are to make any kind of meaningful progress. And this year, absolutely top of the list is the 2035 climate goals that countries have to produce. And these are the third round of the so-called nationally determined contributions from the Paris Agreement, which was signed 10 years ago. Most countries have missed an earlier deadline in the year when they were supposed to submit these updated plans. And the UN now says that the country's plans, as they stand at the moment, are only enough to limit global warming to 2.5 degrees, which is not enough. And, we're really trying to get well below 2 degrees. So that's really the key issue that needs to be thrashed out over the next 2 weeks. And then there's a laundry list of other things like rules and standards for carbon trading between countries and how to scale up renewables. But really top of the list is those country climate plans.
Given the lack of US presence, at least from the US government, to what extent is that affecting and shaping, or will shape, the conversations over the next 2 weeks, particularly when it comes to some of the major emitters?
Well, the US is in the process of withdrawing itself from the Paris Agreement for the second time. It's the only country ever to do so. And all the other major players remain engaged. They're going to COP, they're sending delegations and so on. And if you just look at the pledges, the EU has put forward a very ambitious pledge to reduce its emissions 70% over the next decade, which is ambitious and in line with the Paris Agreement. China has a new pledge to reduce emissions by 7 to 10%, which is less ambitious, but we think will be well within reach. We think China will outperform that pledge. And the UK and Brazil also have very ambitious pledges too. I think the thing to watch, though, will be India and other emerging markets, developing economies, where we will see whether they take the US pullback as a kind of let off the hook to do less, or even pressure to do less in the coming weeks.
OK, so watch for India and other nations within that category as China outlines its targets. What is the significance of Brazil hosting the COP this time round?
Well, so every COP host country brings its own kind of priorities and issues to the table. And I guess the top story in Brazil is the Amazon rainforest, right? The Amazon rainforest is, the most important carbon sink in the world, and tropical rainforests in general play a huge role in stabilizing the climate and protecting global biodiversity. So Brazil is trying to launch a $125 billion fund to protect global tropical forests. Our team thinks there's a $1.3 trillion funding gap to protect global biodiversity. So this is going to be a pretty important opportunity to scale up funding to protect forests and biodiversity writ large.
OK, Albert, really helpful breakdown of what to watch over the next 2 weeks and what is in focus and the importance, of course, of these conversations in Brazil over the next 2 week period. Albert Chung, Deputy CEO of Bloomberg NEF. Albert, thank you. Meanwhile, Super Typhoon Fangwon has made landfall over the northeastern part of the Philippines. It's forecast to cause widespread damage, power outages and flooding across the island of Luzon as it moves west. The typhoon has already left 2 dead and prompted the evacuation of more than 1 million people. Jeff Bezos' Blue Origin has postponed a planned second flight of its New Glenn rocket due to weather conditions and unspecified ground equipment issues. Blue Origin aims to send 2 spacecraft on a trajectory towards Mars for New Glenn's first NASA mission. The mission is seen as a crucial test for the space company in its quest to challenge Elon Musk's SpaceX. Coming up, US airlines brace for more turbulence as storms and a shutdown cripple flight schedules. More on the fallout amid warnings that deeper cuts could follow. That is next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. Happy Monday, I'm Tom McKenzie in London. These are the stories that set your agenda. Stocks and futures climb as the US Senate moves closer to ending the government shutdown, as moderate Democrats break ranks to support a deal. US air travel nears a breaking point with more than 10,000 flights delayed or cancelled on Sunday alone amid severe weather and shutdown-related staffing shortages. And in China, Consumer prices rise unexpectedly in the month of October, driven by holiday travel and higher food and transport costs. Economists, though, say the rebound is likely to be short-lived. Let's get to the markets then. Another big week, of course, of earnings, but front and centre right now is the politics of the US and some movement to end what is now a record US shutdown. That is leading to risk on across the equity markets. A strong session in Asia. European futures pointing high by 1.4% after 2 straight weeks of losses. US futures also on the front foot, with the S&P E-minis higher. NASDAQ 100 futures pointing higher by 1.2% after the worst week for the NASDAQ 100 last week since early April. Here in the UK, the FTSE 100 looking to add 0.8%. S&P E-minis, as I mentioned, pointing higher by 47 points. Let's flip the board and look cross-asset then as we go risk on across the equity markets. And you're seeing that across commodities as well in other asset classes. Treasuries are selling off, so yields are up around 4 basis points on the benchmark US 10-year, currently yielding 4.13. Euro dollar at 1.15, largely unchanged on the single currency. Brent is up, as I mentioned, along with other commodities like iron ore and copper in the session today. Brent up 0.8%, and gold gaining as well. ETF flows and PBOC buying over in China, lifting the momentum for the yellow metal, up 1.8% so far in the session. Now, amid signs there may be a shutdown breakthrough, the US is continuing to experience flight chaos. As we've mentioned, more than 10,000 delays and cancellations just on Sunday. Bloomberg's Lean Al-Rashan joins us with more in terms of the details, what is happening in terms of the travel chaos, of course, in a crucial couple of weeks for the US as well. Lean, how much do we know about what is happening in terms of the flights in the US? How much of it is tied to the FAA and the staffing squeeze from the shutdown that continues, of course?
Morning, Tom. Well, like you said, there's 10,000 flights cancelled or delayed today. And just to give you a scale, in 2025, this is the 11th day with the most cancellations. So we're not hit, the worst day in the U.S. this year. A lot of it is, of course, due to the staffing shortages for air traffic controllers. But you have other factors that are making things worse. You have the winter storm in Chicago, and that's one of the biggest airports in the U.S. And there's, decades of hiring shortfalls in these airports, and especially like Newark and other airports in New York. And things are expected to only keep getting worse if the government shutdown continues.
What does this mean? I mean, the major Thanksgiving holiday then is of course approaching. What is air travel likely to be if this shutdown continues in these constraints continue to hit the airline sector?
Well, the U.S. Transportation Secretary, Sean Duffy, said he expects travel to come to a virtual standstill during Thanksgiving. Air traffic controllers are less likely to come in while they're not getting paychecks during the holiday season. We're coming on a few of the busiest days and months for airlines in the U.S., and he expects that they're going to require airlines to cut flights by 20% if this shutdown continues past November 14th.
Lean, thank you very much indeed on what we're seeing in terms of the airline disruption in the US as we count down, of course, to Thanksgiving and the holiday stateside. Lean Al-Rashan with the details. Thank you for that update. Let's continue the conversation on the government shutdown now. We're joined by Melanie Baker, senior economist at Royal London Asset Management. Melanie, good morning. Thank you for joining us. How much relief can we expect across global economies, across the US economy, on these moves to end the US government shutdown? It may not happen quickly, but at least there have been some moves in the last 24 hours or so.
Yeah, no, that's right. It is quite a relief to at least see some progress. I mean, there just had been so little apparent happening. And this is now, as you point out, the longest shutdown. I'm not feeling too much of a sense of relief yet, right? So if you look at this sort of vote, it's a procedural vote. There'll have to be a further vote passed. It has to get through the House. It has to get through Trump as well, of course. And the agreement seems to be around funding, full sort of funding through to only the 30th of January next year. But yes, it's good to see progress. But in the meantime, quite a significant temporary impact on the economy.
And of course, economists, yourself included, no doubt, Melanie, have been left slightly in the dark in terms of the lack of official data. But we have had private sector data that's come through during this period, this government shutdown period. What is your best understanding right now of the relative vulnerability of the US economy, if that is the way to frame it, when we think about consumer sentiment, when we can think about the jobs market?
Yeah, no, it's a good question, right? So you're right. I mean, we are a bit in the dark. I'd love to have a better suite of US data at this. It's a really important juncture. We have got some data, as you point out, from the surveys, but the data has been a bit mixed, right? So if you think about that consumer element and focus on the labour market, which would be really important and is really important, of course, for consumer sentiment. Think back to last week, we had what was a sort of moderately reassuring ADP set of data, and then we had the Challenger layoff survey, which wasn't particularly pleasant reading. The ISM suggested maybe things are getting a little better, albeit still soft. It was, a very, very mixed picture really across the board. So it is quite difficult. And if you think about it from a Fed perspective, I think you just keep being reminded of those comments from the likes of Trump and Goolsbee, where if you're traveling in a bit of a fog, maybe it makes sense to sort of slow down.
Markets are pricing about a 60% chance of a December cut from the Fed, Melanie, and 2 cuts between now and June of next year. How are you thinking about the Fed's next steps as they contend with this data blackout, at least for now?
Yeah, it's tricky, isn't it? I mean, I wouldn't be, surprised if they end up skipping in December. It's just very difficult to see them kind of being able to be fully confident about where the economy is. We're now missing so much key data, and it's this sort of the next CPI print, after the September one, it's the payrolls data as well. It just makes things really, really quite difficult here. But yes, generally I am expecting a bit more cutting from the Fed, but it wouldn't surprise me if that's more next year.
We focus on China this morning as well, Melanie, with inflation data out for the month of October, and inflation actually ticking up, surprisingly, and that being put down to some of the holiday momentum over the October period in China. Is there any expectation from you and the team that the inflation story, or at least the deflation story in China, is on the brink of turning around?
I find it's something you've been hoping for, but it's hard to feel too optimistic, particularly around this set of data. We did have a somewhat longer than usual holiday period. It looks like the data is somewhat holiday affected, so we had that better core inflation. But if you go down to components, there's something. It looks like that might have played a role, and then gold prices as well played a bit of an element too. So hard to feel too optimistic yet. But yeah, good set of data this week. We should have a better picture. But again, a little bit cautious given the holiday effects.
Are you seeing any evidence of the deflationary export of deflation from China to Europe and the UK? Are you seeing any of that in the data here?
So that's a good question. I mean, we're certainly seeing a lot of we're seeing evidence of trade redirection in the trade data. So we saw you can see that happening in the data where export growth to the US has been quite negative, but it has picked up over the year to everywhere else, including the likes of the UK and Euro area. But yeah, not so clear when you look at the data. I'd say as of yet, not a clear narrative, but something I've been expecting to weigh on the data over the sort of next 6 months or so.
Melanie, I want to get your views on the UK before we let you go. The BOE, of course, holding, but with a bigger division or more pronounced division amongst policymakers last week. So no cut for the month of November from the Bank of England. Does that, in your view, put December more firmly in play for the BOE?
Yeah, I think it does. And not so much just the fact that it was close, but if you look at we've got the individual paragraphs. You can see that that Governor Bailey is sort of clearly identified really as a swing voter, and he was fairly clear again in that paragraph. He wants more evidence, but he also said in the press conference, we will get more evidence before the December meeting. We'll have of course 2 more CPI prints. We'll have the budget to analyse as well, and that budget is of course broadly expected to be contractionary for the economy. We're going to get tax hikes, very likely, and expect to have measures to lower inflation as well. So I'm expecting all of that to mean a likely December cut.
On the contractionary nature, the likely contractionary nature of that November the 26th budget, then, Melanie, how is that factored in, that view factored into your outlook for the UK economy into 2026?
At the moment, it's just a sort of another year of somewhat disappointing growth, but it's very hard to pin down at the moment, I think, without seeing the detail. It'd be really important, for example, the timing of any various of measures that get put in place by the Chancellor. Do we have the income tax thresholds being frozen again? And that means a lot of the tightening will actually be quite far out in the profile. It's really what she puts in for the next couple of years and the particular measures and timing. I'll wait and see the detail.
Okay, as we all will. Melanie Baker, Senior Economist at Royal London Asset Management. Melanie, thank you very much indeed. We appreciate your time this morning, taking a bit of a world tour when it comes to global economies with focus on the US, the UK and China, and some changes around the inflation story there. Now, some other stories making the news this Monday. Pfizer has agreed to buy Metsera for up to $10 billion after a tumultuous bidding war with Novo Nordisk. Pfizer raised its offer for the obesity drug startup to match Novo's revised bid. Metsera cited a call from the US FTC on potential risks from the proposed Novo deal structure. Pfizer had already secured FTC clearance for its bid. Bloomberg has learned that private equity firm Permira is nearing an agreement to acquire JTC, a London-listed provider of fund solutions and corporate services. We understand Permira's offer has received support from JTC's board, outbidding rival suitor Warburg Pincus. Shares of JTC have risen about 38% this year, giving the company a market value of close to £2.3 billion. And the BBC's Director General, Tim Davie, is to resign amid allegations the broadcaster misled viewers by editing President Donald Trump's remarks in a documentary. The clip made Trump appear to say that his supporters should, quote, walk down to the Capitol and, quote, fight like hell. In fact, he said they should, quote, cheer on our brave senators and congressmen and women, while the fight like hell remark was from a different part of the speech. News Chief Deborah Turness has also quit over the controversy. Coming up, a deep dive into AI security and governance and adoption. We're going to speak to the CEO and co-founder of Nexos.AI about his firm's plans and recent Series A funding. That is coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, as many businesses adopt AI, the rise of shadow AI threats has followed. That's when employees use AI tools for sensitive tasks and inadvertently leak data in the process. Nexos.AI, an AI security and governance startup founded by the team behind Nord Security, has raised 30 million euros in a Series A funding round. And the CEO and co-founder of Nexos.AI, Tomas Okmanas, is with me in the studio. Thomas, thank you very much indeed for joining us and for flying over from Lithuania for this. So, you've raised this funding. You're backed by the likes of Matt Miller over at Vivantic, Index Ventures, but also the founders of Klarna, Supercell, Wix, and Revolut as well. So some serious backers behind you. 30 million euros. You just launched in January, so this is impressive in terms of how quickly you built this out. Talk to us about what the problem is that you and the team are trying to address as we look at enterprises and we raise questions about to what extent European companies in particular are actually adopting AI.
Yeah. So, thanks for having me here. And almost a year ago, what we started seeing within our portfolio companies and hearing from our, CEOs within our network that when the ChatGPT was born, it was a wow moment for all the industry. And consumers adopted ChatGPT very, very quickly, right? We started using it, testing it, and what we saw that the biggest data leak in enterprise history will start happening or is happening in front of our eyes now. What I mean by that enterprises are not adopting AI that quickly as consumers, but it boosts so much of the productivity that everyone is actually using it within their personal accounts. So there are many enterprises that do not allow the use of public LLMs, but people are actually using their personal accounts and uploading sensitive information from legal to financial to marketing And when we saw that problem happening, we started Nexos.AI just in January, and very happy that lots of founders, friends, and CEOs joined us in this new venture.
So cybersecurity, data leakages, and governance, that is central to your proposition. What exactly are you offering customers, and how much demand do you expect?
Exactly. So now, if you're an enterprise, you need to build your enterprise ecosystem yourself. So it's like building lots of Lego blocks, and you need to build everything in-house. So different products to procure, different systems to buy. With Nexos.AI, it's one all-in-one AI platform where you use our platform and get all the security, observability, budgeting, guardrails. And we are the Switzerland for LLMs. What we mean by that is that there are different LLM providers. So there is probably, for Gemini is maybe better for image generation. For voice, 11 Labs is great. Harvey is great with Legora for legal things. For marketing, it may be something different. For ChatGPT is for general use, right? And we have more than 200 models in Nexos.AI, and we either route it for you automatically, or you can use it to route it yourself. So you get access to all of the models, and plus on top you have all the security, observability, visibility, and budgeting, and you can use it securely within your organization.
Are there particular organizations, particular enterprises where you see the greatest demand for this kind of solution?
Lots of actually both traditional and tech sector is using it, and especially regulated industries. They even want to have the on-premise self-hosted solutions. So there's the TAM is so huge, we didn't even expect that it would be so wide.
What does it tell us? What are you seeing in terms of the adoption story in Europe? A lot of founders I speak to say the US is just adopting much quicker than in Europe. Are you seeing a similar story here, and what are the challenges to adoption?
Yeah, for sure. I think, there are the frontier models that's been in the race with the US, and I think China is just following behind, but only on a very, very low margin. Europe is definitely, a bigger gap behind, but enterprise really want those tools and to adopt them very quickly. And we see lots of companies in Europe actually asking, but the adoption is slow because we have so much, policy legislation, so it takes time longer in Europe than in the US, for sure.
And cybersecurity you've touched on, and you come from that cybersecurity background, of course, with your former venture, Nord. You are also partnering with CrowdStrike, a key player within cybersecurity. What is the nature of that partnership? What does that allow you to do?
Yeah, so as of now, actually, we're announcing a strategic partnership with a prominent cybersecurity player, CrowdStrike, to secure the all AI ecosystem from infrastructure to agents, and actually even more, as of this week, they're becoming our customers as well for their internal AI use and a strategic design partner. So we're very excited to announce this partnership with such a huge name like CrowdStrike.
Okay, do you expect other partnerships with other cybersecurity firms, or is it going to be a singular?
We're going to be looking into it, but so far we're going to be focused on CrowdStrike.
Okay, so that partnership with CrowdStrike, who will also be a customer of yours as well. What is the next milestone then for you and the team at Nexos?
So, we're just a young company, right? So we just started January, but this AI, the world is, you cannot go to sleep. You wake up and there's something else happening. You cannot go on holiday and go offline for a week. So you don't know what the next door is going to be, but we're very excited to be in this space. And I think it's a long way to go for all the AI enterprises in the world to adopt the AI securely and safely and responsibly. And we're very happy to be in this place to help them do that.
Into 2026, are there growth targets that you have in mind in terms of how much you want to be shipping through next year? How ambitious are you at this point?
We're very ambitious, but now heads down and really building the product that our customers want and like. And I think there's so much room for us to innovate that every day is a hustle. So we're excited.
Every day is a hustle. Thomas, thank you very much indeed, and we appreciate you coming to the studio this Monday morning. Nexos.AI CEO and co-founder Tomas Okmanas, thank you. Now, in other tech news today, TSMC has reported slowing growth in its revenue in October, potentially another indication that AI demand is moderating as the market turns frothy. Sales in October rose 16.9%, the slowest pace since February last year. Meanwhile, Nvidia CEO Jensen Huang says he has asked TSMC for more chip supplies to keep up with booming AI demand. Speaking at a TSMC event in Taiwan, Huang says Nvidia's AI memory chip suppliers have scaled up capacity to support the company. And China has confirmed that it's taken steps to exempt compliant exports, compliant exports, I should say, of an Nexperia chips intended for civilian use. At the same time, the Commerce Ministry urged the EU to press the Netherlands to, quote, correct its erroneous practices. The move follows talks between Dutch and Chinese officials after China curbed exports in retaliation for Dutch controls on Nexperia. There's a lot more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So there has been some progress in terms of ending that US government shutdown, the longest on record. Of course, there's still some challenges, some hurdles they need to get through in the Senate and the House as well. It could happen potentially this week if everything aligns. Here are the betting odds then in terms of how markets, at least those placing bets on this conundrum, are thinking about things. Betting odds have gone from about a 60% chance, down to about 20 in terms of the expectations. The odds, I should say, the odds have moved from 60 down to 20 in terms of whether or not they get this resolved. On the back of that test vote that's gone through the Senate, of course, there are still those hurdles. There are splits within the Democrats as well. Got to get through the Senate, got through the House, and then, of course, onto President Trump's decks. But the odds have reduced on the back of this news, and that, of course, is feeding into the upside across these equity markets. Let's flip the board and have a look at China. We're talking about the deflation story for the month of October. Inflation actually picking up, surprisingly for some, at least coming in higher than the estimates had expected. It was, of course, a month of holidays, and so you saw travel rebound, you saw consumption, particularly around food and purchases, picking up. But our own team at Bloomberg Economics thinks and says that deflation remains deeply entrenched. They don't think this is going to be a long-run reprieve. Across the broadest measure of prices in China, you have now seen a more than 2-year decline in those prices. So a bit of a tick up in October, but not expected to be long-lived from our own economists, at least. Let's flip the board and have a look at the correlation, the inverse correlation between Nvidia and volatility. We did see downward pressure on Nvidia last week, down about 8%. And this is the VIX index in terms of the movements that we saw in that sell-off. The concerns about AI, of course, last week, and correlations with the Nvidia story, down 8%. And you saw volatility ticking up. That reversed to some extent on Friday. Jensen Huang's been speaking over the last 12 hours or so. So those comments will be in focus for markets as well. The opening trade is up next. This is Bloomberg.